Welcome to Business 360, reaching you from the beautiful hills of Ibiakoran. I am Edidio Martin. We'll begin our Business 360 today talking about businesses around the world. And today we're starting from the Tesla-owned company, the Tesla company owned by Elon Musk, as Elon Musk has threatened to sack some of his employees. Tesla majority shareholder and chief executive officer Elon Musk has threatened to sack executives at the electric car maker over their work-from-home policy, which became famous among corporations following the coronavirus outbreak. In an email posted on social media platform Twitter, the world's richest person wrote to his staff that remote work was no longer acceptable and said persons who disagree should find their way out of Tesla. His condition to allow a partial remote work is if the employees work a minimum of 40 hours per week in the office. He argued that he wants Tesla's office to be the main office and not a remote branch office. When Musk was asked about the email, he stated that workers should not pretend to work elsewhere and pretend that they are working in Tesla company. Let's look at Sri Lanka's economic situation right now. As it is right now, the prices as it faced Sri Lanka faced the worst economic crisis in more than 70 years. It comes as severe shortage of essentials, including food, helped to push inflation. The rates which prices rise is to a new record. Sri Lanka officials have been looking for ways to boost food production, as Prime Minister Ranil Wickremesinghe has warned of severe food shortage by August. Reports say the country is also applying for around 100,000 metric tons of food in the form of donations or subsidized sales from a South Asian food bank, which has supplied rice and other goods to countries in need before. Meanwhile, on Tuesday, the Sri Lanka government announced an immediate increase to the value-added tax, the VAT, from 8% to 12%. The move is expected to boost government revenue by 65 billion Sri Lanka rupees, which is $179.9 million. It also said corporate tax would rise in October from 24% to 30%. Also on Tuesday, official figures showed that Sri Lanka's rate of inflation rose to a record 39.1% in May from a year ago. It had reached a previous high of 29.8% in April. Inflation reduces the purchasing power of money since more money is needed to buy items. Last month, Sri Lanka defaulted on its debt for the first time in history when grace period came, with $78 million of unpaid debt interest payments expired. These defaults can damage a country's reputation with investors, making it harder for it to borrow money, the kind of money it needs on international markets, which can further harm its confidence and the economy. Well, the world continues to feel the impact of Russia's war in Ukraine. While some countries feel the impact on the increase of food prices, for others, the impact is more visible in the hike in fuel prices, especially in African countries. So let's start with African countries. In South Africa, for example, the continent's most developed economy saw gas prices go above 24 rands per litre. That's $1.50 more than per litre, more than $5.80 per gallon. Diesel price also went up. The latest increase makes fuel in South Africa about 40% more expensive than a year ago. To try to hold down the spike in price, the government has reduced its tax on fuel sales. The government said the increase were a result of the rise in the price of Brent crude oil. Economists are warning of further increases throughout the year, which will hit consumers already dealing with rising food, electricity, and transport costs. According to them, the biggest impact will be felt by the poor who are already facing economic hardship. Let's now go to Zimbabwe. The situation is not any different in the neighboring country, Zimbabwe. Gasoline now costs about $1.70 dollars per liter, up from $1.44 before Russia's invasion of Ukraine. The government attributes the increase to the war in Ukraine. The Information Minister, Monica Motsagwa, says to reduce fuel prices, Zimbabwe will introduce the mandatory blending of gasoline with ethanol products as produced locally, stating petrol will be blended with 20% ethanol, which will reduce the pump price by 7%. Right now, Zimbabwe's annual inflation rate has risen to 66%, as prices of basics spike in response to increases in gas prices. The state-owned bus transport company more than doubled its fares last week. Also, let's look at Uganda, another African country. Uganda has also been battling rising fuel costs since 2021. After the government increased excise duty on petroleum products, the prices have surged even higher in recent months, driven by a brief period of shortage in neighboring Kenya, as well as what the government sees as international pressures stemming from the war in Ukraine. A liter of gas in Uganda now costs about $1.50, a sharp rise from an average $1 in early 2021. Now let's move to Libya. Libyan oil company says a broken pipe is causing the crude spill in the desert. Authorities say the pipeline rupture in Libya was spilling thousands of barrels of oil into the desert as workers scrambled to seal off the leak. The damage to the land pipeline in the Saber oil field to the Tobruk terminal on the Mediterranean was the latest blow to Libya's struggling oil industry, as renewed tension again divides the chaos-stricken country. The Arabian Gulf Oil Company, which operates the pipeline, estimates that some 22,000 barrels a day were being lost from the leak, which started on Tuesday. The company, which is an affiliate of the state-run National Oil Corporation and based in the east city of Benghazi, blamed the lack of pipeline maintenance on the shortage. Well, the Namibian government has announced that the volume of trade between both countries, that's Namibia and Nigeria, has hit $10 million annually. High Commissioner for Namibia to Nigeria, Humphrey Gatesy, disclosed this in a press briefing in Abuja, revealing that Namibia mainly exports salts and electronics to Nigeria. Well, let's hear him speak.
Especially in the rural areas. There were various doctors, medical doctors, teachers, and various other professions who came to assist us. Today, we have around 3,000 to 4,000, more than around 4,000 Nigerians who are resident in Namibia, and many of them are former Technical Aid Corps members who have chosen Namibia as a home after their contracts expired. People-to-people contact between Namibia and Nigeria is quite high, and slowly also science independence. Many Namibians are resident in Nigeria, but our numbers are very minimal. I think we have around 20 individuals with their families. They might come somewhere between 30 to 40. So we have annually around 1,000 travelers from Nigeria who travel to Namibia. Most of them tourists, but also people going for business. Government people don't need a visa because we have an agreement between the two governments that government officials and diplomats don't need visas to travel between our two countries. Our trade is somewhere around 10 million a year, and we are mainly exporting salt and electronics. There is a factory that is being built in Lagos to produce those Namibian electronics. The relationship between Namibia and Nigeria is indeed excellent, and our expectation is that when hopefully this year in August 2020 we will have the next joint commission of cooperation between Namibia and Nigeria, we will be able to put a number of win-win projects between Namibia and Nigeria on the table.
Well, at this point, we'll go for a break. When we return, we'll look at the business environment in Nigeria and, of course, the stock market. Just stay with us. Thank you very much for being there. Well, as it is, Nigeria has attracted $2.58 billion worth of investment in the first quarter of 2022. Between January and March 2022, Nigeria attracted this amount, a significant drop from the $8.48 billion recorded in the same period in 2021. According to the investment announcement captured in Nigeria Investment Promotion Council, the NIPC, Nigeria recorded a sharp drop in investment in the first quarter of 2022 as investors' commitments declined by 226% compared with the first quarter of 2021. According to the NIPC, the investments recorded in the first quarter of 2022 were committed to a total of 33 projects across 5 states in the Federation and the Federal Capital Territory. So let's look at the breakdown. The manufacturing sector got the lion's share of the investment as it received $1.1 billion, representing 45% of the total investment announced in the first quarter of 2022. The agricultural sector got $0.64 billion. That's 25% of the total investment announced. The information and communication technology sector, that's the ICT, was the third favorite sector for investors in the first quarter, as it attracted $0.52 billion, representing 20% of the total sum. projects in the transport sector attracted $1.12 billion, which is 5% of the total amount announced investments for the quarter, while other sectors shared $0.15 billion, representing 6%. Global foreign direct investments, that's the FDI, has been projected to drop by 50% this year, being the worst in the last 20 years. Well, as it is, the Nigerian oil price may soar after the EU ban has got Russia off. It is mixed blessings for the Nigerian economy, as prices of crude oil further soared a couple of hours after the leaders of the European Union, the EU countries, reached an agreement to ban 90% of Russian energy imports by the end of the year. After the EU finally agreed on the compromise deal, it sent the Brent crude, which is the Nigerian Brent, the benchmark for Nigerian crude, higher by $1.17, which is 0.96%, to $122.80 per barrel, and raised the West Texas Intermediate, that's the WTI crude, higher by 37%, which is 0.32%, to $115.40 per barrel. While it is expected that the rise in oil price is a blessing, Nigeria's unpreparedness on what is happening in the global oil space could be to the country's disadvantage. The governor of the Central Bank of Nigeria, Godwin Emefiele, at the last monetary policy meeting, the MPC, revealed how Nigeria's reserve was depleting due to the high cost of importing fuel. He said, gross external reserves declined moderately to the 38.36 billion US dollars as at May 19, 2022, from $39.28 billion at end of March 2022. Well, this was attributed to the weak accretion of the reserves from exports and the high cost of importation of refined petroleum products. Recall that when oil price crossed $120 benchmark in March, Nigeria suffered a nationwide scarcity occasioned by the importation of adulterated fuel. Right now, Nigerians will be hoping that this time, the federal government will be prepared to mitigate any negative development the higher price could bring to the economy. Well, the FIRS, the Federal Inland Revenue Service, has threatened states and local governments that have not been remitting their tax. The Federal Inland Revenue Service, FIRS, has stated that it will commence the process of enforcement and recovery of unremitted tax deductions owed by some states and local governments in Nigeria. This decision is contained in a public statement signed by its executive chairman, Mohammed Nami, where the tax authority noted the relevant portions of the company's Income Tax Act, the CITA, and the Value Added Tax, the VATA, stated that ministries, departments and agencies of government, as well as parastatals and other establishments were mandated by law to deduct certain tax while making payments to third parties and remit those deductions to the FIRS. It further stated that most states and local governments have failed to comply with these provisions of the law, despite appeals from the FIRS. Following this failure to remit by defaulting states and local governments, the FIRS has stated that it will consequently advise the federal government and the Ministry of Finance to henceforth decline approval of any request for the issuance of state bonds or other securities in the capital market, as well as requests for external borrowing or approval for domestic loans from commercial banks or other financial institutions by any of the states and local governments with outstanding unremitted tax deductions. The tax authority further stated that it would also publicly name and shame the defaulting states and local governments while publishing the amount owed in unremitted tax deductions. The FIRS has called on all defaulting states, the local governments as well, to promptly remit all unremitted tax deductions within 30 days of the publication, which started yesterday, so 30 days from today, to avoid it taking these enforcement actions. Well, we cannot finish this program without looking at the stock exchange market. So let's look at how how the stock exchange market played out at the end of business yesterday. Investors in the Nigerian capital market lost 8.69 billion naira following the dip in the value of shares by 0.3% yesterday. That's at the close of business yesterday. This pushed the equity capitalization to 28.55 trillion naira. The all-share index was down by 16.13 basis points to close at 52,974.15, compared to 52,990.28 recorded the previous day, which was on Tuesday. Etna led the gainers to close with 7 naira 44 kobo per share. FTN Cocoa gained 0 naira 35 kobo to close at 0 naira 35 kobo per share. NACO, Ikeja Hotel, Transcorp shares also appreciated to join the top gainers. Okumo Oil topped the losers chart to close at 190 naira 50 kobo per share. NCR and corn oil shares also fell at the end of trading day yesterday. In total, investors traded 295.35 million shares valued at 3.59 billion naira in 4,637 deals. Well, on that note, we call it the end of Business 360 today. Join us again tomorrow for more information in the business world. I remain Edidio Martin. Thanks for watching.